There is no doubt that this is the most hated market rally in history. If you look at any online source, whether it's Twitter, whether it's YouTube, you'll see posts like this. The lag effect will punch the market in the face. Post after post talking about how this is euphoria, this is not a real rally, and yet the stock market continues to go up and up and up. And stocks like Apple making all-time highs, Nvidia making all-time highs, really defying what seems to be logic. Now, if you've been watching this channel, you'll know that I'm not surprised. It doesn't mean that I was expecting this to the T, but if you guys have been following this channel, you can go back to any video in the last 2 months. I basically said that 4,300 was my expectation if the debt ceiling agreement was reached, and I thought it would be reached. It was just a matter if they would push it to the brink or not. And 4,500 was my expectation if, what was that event? If the Fed actually did pause, and they paused. And so we got to 4,450. So to me, this wasn't really defying logic in terms of the broader market. Not yet. It would defy logic for me right now if we just kept shooting up to all-time highs without a retracement. And this is why I do think we are going to get a pullback here coming in the summer. Now, the problem with perma-bears is that pullback could be so short that we pull back to a level that we already hit before, to a previous high, or the market can keep going. And then by the time it pulls back to an area where we already broke through. And then, of course, we have not yet seen a recession, not by any means, right? Even the GDP now projection is projected to be 1.9%. The GDP growth is. So we haven't yet hit a recession, and yet the yield curve right now between the 10-year and the 2-year is back to all-time low levels. So in this video, as always, we're going to use data to discuss what I think is going to happen in the markets next. We're going to be discussing what usually happens when the stock market actually hits a new bull market, just as the S&P 500 did. We hit a new bull market in the S&P 500. What usually happens then? And what should we be expecting? How should we be positioning ourselves? If you guys are part of the Academy, you know that we started hedging already last week. So let us get into all that, another TA Tuesday. But before we get into it, I want to say that we are doing a summer mentorship. We are only going to be coaching 20 or less people. I want to be sure that the people that I coach really want to be there, especially if I'm going to be hand-holding them through the entire process. It's going to be 8 weeks, 2 times per week. We're going to be going over everything in detail: how to do technical analysis, how to trade options, how to trade futures, how to do risk-reward management. And no student will be left behind, as this group will be extremely small. And this will be a very limited class that we are running. Again, less than 20 people, and we're going to be hand selecting each of those that apply. Our wait list is filling up really fast. Make sure that you put your name on the wait list if you want to be coached by me. Again, this is not going to be some rogue coach that we hire. It's going to be me. I'm going to be walking through a class of less than 20 people. So make sure that you click the link in the description, because summer is coming up, and tell them that you watched the video from Tuesday, June 20th. And I will make sure to tell them, if you are approved, that to give you guys a discount, right? So just mention that you watched the video from June 20th. And if you're approved, I'll tell them to give you a discount. So let's get right into this analysis right here. So why is this the most hated stock market rally? Well, you guys know how I feel about this. You know, when people were asking me, is Tesla a good buy? Here's what I said about Tesla going back to January 6th. And you know what January 6th was on Tesla? January 6th was the absolute bottom on Tesla. Friday, January 6th, 2023, right here. It was literally the absolute bottom candle on Tesla. It hit a low of 101.81 to be exact. And I said, I'm being asked a lot about whether I'd invest in Tesla right now. What people are asking is, can you please confirm that this is the bottom, because I want to catch it? Nobody asks this when they bought Tesla at $300. Frame your approach differently. What is Tesla's realistic downside versus upside here? Is it 25% more downside versus a potential 150% upside? If you think this, how can you justify not investing here? The problem with humans and investing is that we still have many remnants of an ape brain intact. We need certainty before committing resources to something. The problem with investing in this way is that certainty is only derived when a stock is already making highs. The apes that do succeed are the ones that can see miles ahead and make moves today that don't have an immediate reward. In other words, acting less apish than the masses. I'm saying if your thesis is that there's exponentially much more upside than downside, how can you justify not investing? That's what I said when Tesla was $101. And since then, it has gained much more upside than 125%. It's actually gained 168% upside. So this is why this stock market rally is hated, is because when perma bears who aren't really investing with a plan in mind, they're sort of buying, they're just waiting, and they don't know what they're waiting for. That's the problem, right? So October lows hit, and you guys that are part of the academy know that that is when we started buying stocks. Now, I did end up selling a lot of stocks in February. Admittedly, you can't time the bottom or the top. That's besides the point. The point is that when stocks get cheap enough, perma bears don't really know when to invest or when they're going to deploy. Like, I guarantee you the stock market could have rallied. I mean, could have dropped some more, could have dropped by another 50%. And the bears would not know to pull the trigger, right? Because they're not waiting for anything. They're just waiting because it just becomes habitual. And then when the market starts rallying, they want to find every excuse in the book why it doesn't make sense. However, were earnings good? Yes or no? Yes, earnings actually beat a lot of most people's expectations, most analysts' expectations, and even my expectations, right? I didn't think by Q2 2023 we would have good earnings. I'm like, wait, the interest rate hikes should be having an effect on earnings around this time. Obviously, we can't predict recessions. We cannot predict when an earnings compression is going to happen, but I was almost certain that it would happen by Q2 2023. And I wasn't really aware of what was to come, which is why February was my sell point for a lot of stocks. Now, obviously, I still hold a lot of stocks that I bought in October, and I have been investing for 20 years. So, I think people get misconstrued and think that I sold my entire portfolio, which is crazy that I would pick 2023 to sell a portfolio that I've been accumulating since the year 2000. And as long as earnings were good, and obviously we had the bank runs that were backstopped 100% by the Fed. I even got an email last week from one of my accounts saying, remember, the FDIC insurance is now $5 million, which is insane because it was 250,000 limit, right? But because the Fed and the Treasury backstopped the bank runs, that could have been the black swan event, right? And everyone could have been right about the rate hikes having a negative effect and the economy crashing. But they came in and saved the day. And so that coupled with good earnings, I don't think anyone could have predicted that, right? So that coupled with good earnings pushed the stock market higher. Like, what is the reason for the market to fall? Now, you can make all of these, assumptions about, oh, credit card debt. Oh, what about student loan debt? Oh, what about corporate credit? Oh, what about this? At the end of the day, the stock market kept producing good earnings. Companies didn't fail, and the Fed backstopped all of the bank runs. So as of now, to me, this makes sense. Even if you missed it, you still have to, contend with the fact that this makes sense. And if you are a perma bear, you are finding reasons why this doesn't make sense because you just don't want to accept it. Now, what happens from here? Could we get a blow off top? A blow off top basically looks like this, where, it's an upside down V. You make a top and then it just blows off. A lot of people were saying that because there's a famous analyst called Chem Carson, who is really a VIX and volatility specialist, and says that after June OPEX, which came as of last Friday, which was June 16th, he was saying that, that was a very big possibility after June OPEX. He also said the same thing after May OPEX, but that is neither here nor there. However, let's take a look at the broader perspective, okay? Let's take a look first at what happens when the S&P 500 hits a bull market. Well, from 1962, 1, 2, 3, 4, 5, 6, 7, 8 out of the last 11 years since 1962 that we've hit a bull market, we've pulled back within the next 3 weeks. Now, pullback could be a small 5% correction, could be a 10% correction, somewhere between, 5 to 10%. Is that viable? Yes, of course, that is very doable at this stage. We are getting a lot of topish indicators, not only from a technical perspective, but if you take a look at something like the CNN Fear and Greed Index coupled with the NAAIM, this is the National Association of Money Managers. I can't remember what it's called. National Association of Active Investment Managers. So basically, this is institutional money that is investing on behalf of, their clients. So not only is this retail money, but this is also institutional money. And when these two things are coupled and they're at highs like this, you tend to see blow off tops, right? It doesn't mean that we're going to now fall back into a bear market. It just means that we will likely see a correction. But here's why I don't think we will fall back into a bear market. Because if you go back, and I've done this study for you guys before, go back to any bear market, 2008, 2000, 2020, whatever you want, right? 87. You'll see that once we cross above the golden pocket on the Fibonacci, breaking out of from a bear market to a bull market, we have never again seen the bull market lows, meaning these October lows. And it is very possible that we don't see those lows, right? Now, could we get a black swan event and a recession? Because I still think we'll see a recession, by the way, right? People ask, does that mean that we won't see a recession? No, I don't think you can have this yield curve this inverted and not see a recession. We will see a recession. But again, the question is the recession going to be shallow? And is the decline in the stock market going to be so minimal that we get back to a previous high or maybe an interim low, but not back to the bear market lows? Well, how does a stock market perform in a recession? We have this data, and it is a lot more surprising than you think, right? A stock market during a recession usually, by the way, is actually positive. It's positive in recessions more times than it is negative. And certainly the year after a recession, there have only been three times where it has been negative a year after: 2001, 1980, and 1945. That's it. Every other time has been positive a year later, right? So bull markets are actually extremely solid indicators that a market rally will keep going, right? Now, if we do have a black swan event, some sort of corporate credit event or corporate real estate event, of course, who's one to argue with that data when it comes? Like, no one can foresee that. One, you can surmise where the holes will start busting, but nobody can foresee an exact black swan event. That's what makes it a black swan event. So if and when we do get that, then yes, of course, you will have to acknowledge it and accept it into your analysis. Now, is it a certainty that we get a black swan event? Well, I want you to pay attention to one thing here. In 1994, the Fed actually raised the Fed funds rate, right? Let's see how many times. 1, 2, 3, 4, 5, 6, 7 times in about 13 months. And what happened to the S&P 500 in 1994 with the Fed raising 7 times in 13 months, by the way, to very similar rates that we are at now? Well, let's take a look at that. From 1994, we were in an epic bull market that went up before we corrected, that went up 53% until 1996, right? Before we actually corrected. So that was a very violent rate hiking cycle. Now, obviously, I'm not oblivious to the fact that every condition is unique and different, right? So I'm not saying that's what's going to happen exactly, but I'm saying that we can get rate hikes, we can get recessions, while the stock market actually doesn't continue to tank or revisit bear market lows. It is very possible. As a matter of fact, that's how it happens. And based off of this, you absolutely cannot afford not to invest if you are lucky enough to be told that it is a recession, because a lot of times recessions are deemed after the fact, right? But if we get to, November, December, and we fall into a recession, and it is declared a recession, you would be a fool not to invest based on these stats here, right? So in my view, I do think we get a blow off top. I do think we get a correction at some point, starting now, actually, going through at some point in the summer. I do think that it is very possible we revisit the 4100, 4200 level on the S&P 500. So from here, that from the top, if we're talking about 4100, you're still getting a nice 7% reduction. 4200 would put you at around a 5% correction. So somewhere in that range, right? And I think, in my view, that from here on out, all dips should be investable dips from here on out, right? In my view, obviously, do what you want and do what you feel is right. And remember, the possibility of getting a black swan that nobody sees is also real, right? Like, we can't ignore that, based on where the yield curves are at, and based on the fact that, hey, what if the Fed is right in that they are going to raise rates again? I personally think that is the last hike that we saw. I personally think that pause is it. I don't think they will raise again, but you never know, right? If they feel like they need to, based on if inflation starts creeping back up, then they likely will raise again. But that is my take on it. Take it for what you will. Again, make sure that if you want spots for the summer mentorship, a class of less than 20, I only want to take people that are serious. I want to make sure that people that are in there actually want to be in there and want to level up their trading faster than they will ever do using any other method. Click the link in the description and make sure that you mention the Tuesday, June 20th video if you are approved and they offer it to you and you want a discount. Anyway, if you got anything out of this video, leave it a thumbs up. Leave it in the comment section below. Let me know what you think. Are we going to hit a recession? Are you investing now? Are you mad about this rally? Are you happy about this rally? Do you want to see the markets crash for some reason because you think that you are now going to invest, even if you didn't invest before? Would love to know your thoughts. Leave it in the comment section below. Subscribe to the channel. Hit that notification bell. Stay safe out there, traders. Peace.